Hello and welcome. You're watching Your Trades with me, Ankur Mishra and Ankita Saxena. And what a trading session today. If you see the broader indices, they are in quite range. But individual stocks, there are many which actually outperform today.
Yeah, so there is fatigue in the market. In fact, a very range-bound trade coming in on the benchmark indices, and as far as the SMIDs are concerned, they snapped their outperformance. In fact, Nifty was trading within a range just slightly above the 25,500 mark is where Nifty was at. Nifty Bank, however, gave a bit of an outperformance today. It recovered almost 260 odd points from the day's lows. The PSU banking pack was the one that was holding the fort with gains of 0.7%. IOB, PNB, Maharashtra Bank, Bank of India, and Central Bank, these were the top gainers. These were gaining with gains of 2+%. So PSU banking was holding the fort. Besides that, Nifty Metal was another pack that was in the green. And the rest of the counters, rest of the sectoral indices were trading in the red, barring these two sectors. Now, if you look at the broader markets, the mid-cap and small caps, they were underperforming. They snapped their outperformance streak today. Mid-cap turned absolutely flat by the end of the day with marginally in the green, 0.01%. It was actually underperforming. Small cap also traded with cuts of 0.1% coming in there. Couple of other stock movers that were moving in the trading session today. Apollo Hospitals, on the big news of a demerger of its pharmacy and the digital business into a newly listed entity. On the back of that, Apollo Hospital was up in a way 3.5%. BEL hit its record high levels on the back of order wins. It was a big order win of worth 528 crores. That stands from the last disclosure on 20th June. So BEL hitting new record high levels on the back of that. And Reliance, of course, was also moving in trade on the back of the big upgrade that's come in from Nuvama. So Reliance was also moving on the back of that. So these were the big movers in trade today, but nonetheless a quiet day coming in on D Street.
Yes, definitely. And talking about stocks, even Avenue Supermart, Polycab, and not only PSU banks, but the private banking space, there was a lot of action with the likes of IDFC First, Federal Bank, AU Small Finance Bank, all were up around 2% and more. But let's connect to Ajit Mishra, SVP Research Religare Broking. Mr. Ajit, welcome to ET Now. Looking at the market action today, I think banking was something which has caught everybody's attention, and 2 days in a row. What is your sense on Nifty Bank and overall banking space?
Hi, good afternoon, Ankur. So yes, see, banking is definitely one of the key catalysts in this recovery, and otherwise also that the index has made a new record high. The participation is broad-based. Earlier, we were seeing that the private banking majors were hogging all the limelights. Now the PSUs are also equally participating. So with this texture in place, we believe that the banking index can inch gradually towards 58,200, 58,500 levels in the near future. And then positionally, we can in fact see a new milestone of 60,000 levels also. So as a trader, in case if you're planning any fresh bets, any dip towards 56,500, 57,000 zone, is a good buying area where one can look to accumulate with 56,000 as a stop loss and 58,200 to 60,000 as a position targets.
Right, Ajit, also talk to us about Nifty, a very range-bound trade coming in since yesterday. In fact, very quiet day in the market after the rally that we saw last week. What are the levels to watch out for on the frontline indices?
So Ankita, it's a normal phenomena. Means after we see a strong directional move, be it index or any underlying, usually we see a bit of a consolidation or a pause, and it's healthy as long as we are not seeing any major damage to the overall structure. Means if it's more of time-wise correction, which the index has been experiencing in the last two trading session, it is overall healthy, and we believe that it's just a breather before the next new record high for the index. So considering that we have a gap around 25,650 to 750 area in the Nifty index, we might consolidate for a session or two before making any attempt of trend resumption or further uptick. But the overall texture looks positive to us, and 25,200, which was earlier acting as a resistance, should act as a support. So with that as a stop loss, one can continue to look for buying and dips opportunity with 25,850 and then a new high as a positional targets.
All right, buying on the dips is a strategy which has been suggested by Ajit. Thank you so much for joining at this hour. But market may be in a consolidation kind of a range, but Srishti is actually ready with the technical charts. Srishti, what are you watching today?
All right, two counters that we have spotted for our viewers today. One is on the breakout side and the other one is on the breakdown side. Firstly, let's have a look at the breakout candidate, and that is indeed from the banking space, Federal Bank on the charts, because today the stock did manage to hit its all-time high level. And not just that, what was interesting to see is that stock actually managed to break past its previous high that was seen anywhere back in December 2024. Other than that, what was interesting is that the stock is now taking support of its 20-day moving average in this leg run up. Other than that, from the derivative side as well, we have seen a long build up happening. So this is the first stock on the breakout side. We're moving on to the next one, and this one is a breakdown candidate. NMDC, this one was the stock that was in the news today on the back of the company announcing that they have taken price cuts in their lump iron ore prices. But on the back of this news flow, the technical setup is not boding up well, because we have seen a rejection exactly from its 20-day moving average, the stock retesting its previous lows, and on the derivative side as well, there was short build up getting added in the system. So these are the two stocks that we wish to highlight, one on the breakout and the other one on the breakdown side.
So breakout IDFC first, and on the breakdown side we had NMDC today. Thank you so much for joining us on the technical, Srishti. But let's move on to the word coming in from the wise. Gautam Shah, who's the founder, Goldilocks Global Research, says that banks, IT and RIL come back bodes well for Nifty. Let's listen in.
I think the fact that there are too many things firing in for the Nifty. I mean, we saw the banks do so well. We saw Reliance making a comeback. We saw IT coming back very strongly from the recent lows. So that just helps the overall market, because there are too many, factors and too many sectors which are batting for the Nifty. The Reliance comeback is obviously positive. We've been very bullish on for the last 3 to 6 months is financial services. And I think it's going to go on to do bigger things. Valuations are comfortable, fundamentals are excellent, earnings visibility is there, and smart money action seems to be there, and the charts are in great shape. So I think financial services is really the place to be in. And if you have to participate in this market rally, you need to be in financial services, housing finance companies, insurance companies, NBFCs, banks for the next 3 to 6 months.
All right, moving on, Srishti is standing by to tell us mixed scorecard from Motown for June dispatches. How are the monthly numbers, Srishti?
Well, it's been a mixed bag for the auto sales data when it comes to the June sales data, because what we have seen is that within the space as well, select companies had underperformed, where there were some laggards as well. Firstly, let's have a look at the scorecard. So here in Bajaj Auto, Eicher Motors VECV and Tata Motors PV, these were the laggards in the overall basket, while in-line numbers coming in from Escorts, M&M, as well as within the tractor division, M&M was the outperformer. But let's deep dive more into that, and firstly, let's start with the passenger vehicle numbers. M&M passenger vehicle numbers, like we have been flagging off, that this time you can see a month-on-month decline on the sales data is exactly what we have seen. A 6% decline on the passenger vehicle sales is what we have spotted. But when it comes to Tata Motors passenger vehicle segment, the key to note is that it's the consecutive third or fourth month when Tata Motors passenger vehicle sales has been below the street estimates, and once again we have seen a miss on the number front. Now let's talk about the commercial vehicle segment. Here in Tata Motors managed to meet the estimates with the sales data, with the commercial basket spanning out as per the estimates, where the company actually clocked in marginal jump into their numbers. While Ashok Leyland, this company did surprise with 15,333 units is what the company sold. Eicher Motors VECV numbers were actually in line the estimates. Other than that, within the two-wheeler basket, the outperformer was clearly Eicher Motors Royal Enfield. 89,000 and above is what the company has clocked in, while for TVS it has been an inline set, and so was the case for Bajaj Auto, with a marginal miss coming in on the numbers. But tractors and two-wheelers was the space to be, like we have been flagging off in the preview as well, and this time the tractor numbers do come out to be on the positive side, while Escorts managed to meet the estimates, but M&M did surprise on the positive front, and the commentary from both of these managements remain to be on the positive side.
All right, so mixed bag coming in as far as the auto sales numbers are concerned, with the passenger vehicle being on the back foot. But let's move on across to the other story that made headlines today, and that is Apollo Hospitals, that was doing very well in trade today, that ended the day with gains of more than 3.5% on the back of the fact that they have approved a separate listing of its omni-channel pharmacy and digital health business within the next 18 to 20 months. This move is a part of reorganization effort aimed at unlocking the value. My colleague Shrishti is joining us yet again with the contours of that deal.
Well, yes, that's right. Value unlocking move by Apollo Hospitals is what we have seen as the company announced that they will list their digital and pharmacy business as a separate entity in the next 18 to 21 months. This is seen to be on the positive side because traditionally Apollo Hospitals as a healthcare chain used to have a little bit of discount versus the pure play hospital chains because of so many other variants at play, be it Apollo 24/7, be it the diagnostic, be it the pharmacy rather. And now the company has actually announced that they will get a new company at play, which will include Apollo 24/7 and pharmacy chain Kmid. So this is the value unlocking move that the company has announced, and in the new company there is a share swap ratio that the company has come out with, when the shareholders will receive 195.2 shares of the new firm for every 100 shares of Apollo that are being held. Apollo Hospital will actually retain 15% stake in the new company, and very aggressive targets that are being set for the new company, when from current 16,300 crores of top line, the company plans to scale it up to 25,000 and double their EBITDA margin profile to 7%. So that will be interesting to watch that how being pharmacy, be it 24/7, how they are will contribute in the times ahead. That is something that we will be watching out for. But the analysts do believe that this is a good unlocking move that has been undertaken by the company. The listing will follow once the structure is also in place, likely in FY27. And yes, that's about Apollo Hospitals. The demerger is through, and a positive announcement coming in from the company.
All right, Srishti, thank you so much for all those details. But will this demerger actually benefit shareholders and unlock value? We asked this question to Tapan Doshi. He also shared his view on the hospital major's revenue and valuation. Let's listen in.
If you know this digital business, pharmacy business, retail pharmacy business was making losses, and that was actually bringing the profitability of Apollo Hospital overall down. Now, as it is going to get demerger, value unlocking will happen. If you see the current EBITDA of Apollo Hospital is around 14 to 16%, which may go to 20% post this demerger. Again, the valuation perspective, even if I see, I think it will go to above, maybe 15-20% higher when the demerger normally happens. So Apollo Hospital is also doing very well. If you see their expansion plan is almost, you can say 7,000 to 8,000 crore of capex is there. 3,000-4,000 more beds they are going to bring. Even if you say average revenue per bed is increasing of almost 6 to 7%. So all this combined, I think this is better for the company, and both on the terms of ROCE or ROA or even margin point of view, I think it will benefit it. So one should hold on, and I think good times are ahead for Apollo, at least looking at that deal, I can feel.
All right, let's go across to my colleague Rabinder, who's standing by with the information of all the stocks that were buzzing in trade. Rabinder, take us through all the stocks and news today.
Well, as Bharat Electronic was focused in today's trading session, where a company has said that they have secured additional order worth rupees 528 crore since the last disclosure made on 20 June 2025, and the major orders received include radars, communication equipment, EVMs, jammers, shelters, etc. Apart from this, Bharat Forge is also in focus, where the company's acquisition cost has increased for AM India from 545 crore to 700 crore, and board also approved defense asset sale to Kalyani Strategic worth rupees 500 crore. Apart from this, on back of Q1 business update, Karur Vyasa Bank is also in focus, where company has announced its Q1 business update, and the company said that the bank's total business grew by 5.1% on a quarter basis. And if we talk about advances, then advances was up by 5.8% on a sequential basis. Apart from this, on back of brokerage note, Reliance Industries is also in focus. The Nuvama has come out with a note, and they have given a buy call on Reliance Industry and hike target price to rupees 1801 as compared to earlier target price of rupees 1708. And lastly, paint companies is also in focus, where ICICI Security has come out with their note, and they have upgraded Asian Paint and Berger Paint from reduced to head and reverse negative stance since of approx 4 years, and they say that the industry revenue growth likely to recover in H2 FY26. And on Asian Paint, they have given a target price of rupees 2700 as compared to earlier target price of rupees 2000, and on the Berger Paint, they have given a target price of rupees 650 as compared to earlier target price of rupees 515. So back of this, Asian Paint and Berger Paint, both the stock is in focus.
All right, Ravinder, thank you so much for that list of information which were the stocks which are buzzing in trade today. But moving on, today is July 1 and a slew of changes are coming into effect from today. Hike in train journey prices kicks in from today, and OMCs hike aviation turbine fuel prices, and also government makes Aadhaar verification for new PAN card. What else is changing from today? Kanishka is here with all the details.
Well, it's the start of a new month and July rolls in with a bag full of changes that could affect your fuel stop, train ticket, tax deadline and even your wallet. Let's break it down. Now, first up, if you live in Delhi, petrol pumps will no longer provide fuel to end-of-life vehicles. That means it's time to double-check your vehicle's registration status before you fuel up. It's also a busy month for railways. For the first time in 5 years, passengers will see a marginal fare hike. Reservation charts will now be prepared 8 hours before departure of the train, and Aadhaar verification, that's going to be mandatory for Tatkal booking. In market news, we have SME IPOs that will now come with stricter rules. Thresholds for small investors are going up, so keep an eye on those lot sizes before you apply. On the energy front, it's a mixed bag. OMCs have hiked jet fuel prices by over 6,200 rupees per kiloliter, while IOCL that has cut commercial LPG rates by 58.5 rupees per cylinder. Other than that, you'll now need Aadhaar to apply for a new PAN. So remember that. Also, the income tax return filing deadline that has been extended to September 15th, giving taxpayers some more time to file. Now let's talk money. HDFC Bank that has rolled out some new charges. A 1% transaction fee capped at 4,999 now applies when you use your card to do these following things: pay rent, spend over 10,000 on online games, pay utility bills above 50,000 per month, or load digital wallets over 10,000 rupees. At ICICI Bank, ATM withdrawals after the first 5 will now cost 23 rupees per transaction. Also, if you're using non-ICICI ATMs, that's 3 free transactions in metros and 5 elsewhere. Changes apply after that. Charges apply after that. Now, international ATM, if you're using, that will cost you 125 rupees per withdrawal plus a 3.5% currency conversion fee. So, from fuel stations to railways, banks to markets, July is rewriting the rule book across the board.
All right, moving on to the cues that you need to keep on your radar before tomorrow's trading session. My colleague Snehi is joining in with all the cues to watch out for.
Well, there's lots of cues to watch out for. Not much happening back home, but globally we have a lot of macroeconomic indicators that we are tracking. In fact, from US, Tesla is going to be in focus particularly because Tesla is going to be releasing their second quarter vehicle sales figures. So it's going to be an important metric to track for that stock. But other than that, we are tracking unemployment data from Eurozone, so watch out for that very closely. In terms of corporate action and board meetings back home, you have PNB Housing Finance. This stock is going to be in focus because the board is going to be meeting to mull fundraising. And in terms of other events, you have ECB Chief Economist Philip Lane who is going to be speaking, so keep a close eye on that commentary. And PM Modi is all set to embark on his 5-nation tour as well. So watch out for all of these cues, all of them very important to track in the market setup.
Thanks, Snehi, for all